Going back into an even year, coming out of an odd year, all the fun things. That's interesting. All right. Well, so should be an interesting day today. Of course, we got FOMC. Uh, I think the last notable FOMC meeting we had, we kind of rallied a little bit into the FOMC meeting, and then the markets absolutely got trashed afterwards. Uh, Basically because of comments that they weren't going to be quite as accommodating as the market had hoped. So everybody will be waiting to see kind of what kind of actions are going to be taken today. Yep, thank you for the birthday wishes. It always happens once a year. It's like I remember, it's funny, the first time I remember turning 21, I was studying abroad in England, and at the time there the drinking age was like 12. So it wasn't like this, you're 21, congratulations. I thought it was pretty funny. The birthdays, you kind of remember the birthdays that where you kind of had that moment. All the fun things. You know what, Jim? That's exactly right. That is the truth right there. All right. So just want to take a look at a couple things this morning that are moving pre-market, and just kind of I'll be going through some of the things on this radar screen to see what stands out. One of the things I want to point out is that, even though we've had a lot of strength, there's a lot of all the sectors except for consumer staples, they're still mixed to negative. So nothing that's really cranking out some strong uptrends yet. The exchanges are on fire. CME, CBOE, ICE, they've all been rocking here. Financials, pretty good compared to a lot of the other sectors and things like that are out there. It's very rare when you see an entire sector in a squeeze to the downside, which is what energy is. Metals and mining, and I wanted to come down to semis, of course. You got negative. There's so much volatility there, not really much in the way of squeezes except for Intel. Communications, some things here aren't bad. Of course, we all know Netflix has been ripping it, and um, electronic arts and things like that. So you have some kind of pockets there. Big tech, uh, PLTR moved everything higher. APH, and then CrowdStrike, which has been on a tear. And then otherwise, you got basically it's consumer staples. And everybody's got to go to Costco and Walmart, get their toilet paper and their Coke and their beer and all that kind of stuff. That happens in good times and in bad. And if there's more anxiety in the world, typically you'll see that increase. And then Booking.com, McDonald's, and then from there you have kind of the IBD 50. And if we go in there, you'll see that all these essentially, or most of these, are fairly positive, and they're on this list for a reason. It's where money is flowing into. Typically, they've got strong technicals, strong earnings, and typically it is a pretty good list to choose from. So some of those we'll be looking at. And the ones I get most interested in, of course, is that if the moving averages are all positive, so that's POS, and the reason I have two columns is that I want to know that if they're negative, like if they're if every moving average is stacked negative, it says NEG. But if they're mixed, but the 21 is below the 55, that's an interesting one that I was kind of like to look at as well. Typically, if you get a squeeze in that situation, you have the potential for a more interesting downside move. And if we're looking at the squeezes there's a couple. Some of these stocks don't trade very much volume. Not all of them trade options. So sometimes you kind of have to wait for kind of the perfect scenario to come together or for something like that. Calm, I think that's the meditation app. So a few things like that. So anyway, we'll take a look at those. And of course, kind of the major markets and things like that that are setting up here. That's in TradeStation, so it's a little bit of old school, but I really, really like their radar screen. I was at a meeting in their offices, and they were, looking through some of their. This is a long time ago, and looking at some of their marketing, and they kind of had like a new CMO, not familiar with the industry, and they were talking about all these things they wanted to market, which and all of it was irrelevant to traders. I was like, guys, focus on your radar screen. Why aren't you advertising this? And the marketing guy was like, oh, we're gonna talk about how, you know, just things that as a trader you just wouldn't care about. Something about, we've got a better bid ask. It's like, oh, do you? Just different things like that. But it's like, what are the tools that you have? Because you can trade anywhere. So what are the tools that you have that are unique compared to everybody else? I don't know if that ever sank into them or not, but call them as eggs. That's interesting. So this isn't bad. This is, not kind of the ideal thing, not the ideal kind of a setup, but I don't mind it because the ideal is you get, I don't know why these squeeze outs are so small here, but you kind of get that consolidation, you get a squeeze that launches you to the next level, and then you kind of get the consolidation squeeze that launches you to the next level. And that's kind of the stair step process where the squeeze really comes in handy because you can kind of time these pullbacks and kind of get ready for the next kind of pop there. So on something like this, we've come down pretty good and we're starting to kind of reformulate here. And so this isn't too bad, but it's got more baggage because anybody that bought up here, as you get close to that, they're typically going to want to sell. Human psychology a lot of times isn't a mystery like that. But the idea that we could kind of work our way back to 102, 103, and that this is a stock that doesn't necessarily care about what the rest of the market is doing is kind of interesting. PLTR went and retested the highs. Earnings came out, and you know, I saw that it's like, oh god, it got whacked for earnings. Well, it rallied from about 65. It went up 100%, and after earnings was down 10%. So I would say that it's doing pretty good. So one to keep an eye on there. And then let's go through, see where we're teed up in some of the major asset classes as we kind of head into today. Bitcoin, for all practical purposes, looking for a retest of the highs, or at least a retest of 100,000. Not looking for it to explode higher at this moment. We did have a squeeze that fired off long, and it's kind of losing momentum here. But as a risk asset, it continues to be front and center. Ethereum, this is kind of not so much, right? Bitcoin is kind of the official ETF. You got the ETFs of Bitcoin. It's the official. Hey, if you just want to if you want to own your own money, I mean, that's kind of the appeal of it. You have Bitcoin, so you don't have, it's not a fiat currency or anything like that. You get to actually own your own money. There's ETFs now. You can get exposure to that, all the fun things. Ethereum doesn't quite fit that same bill, so Bitcoin is essentially just outperforming. Litecoin, which I haven't looked at in forever, is kind of similar, kind of in between the two. I used to hold that back when it first kind of came out, and it was always an interesting one to watch. All right, so S&Ps this morning, pretty good overnight action, but it's just fading into the open today. And as we're looking at this pattern that's unshaping here, and there's a lot of doom and gloom, not surprisingly, online right now in terms of like, okay, where is this market going to go next? And there's all the crash scenarios and stuff like that. And so there's a lot of from here that we're going to just die. I don't think so. I talked about this last night. Are we going to have some volatility? Of course. I don't think we're going to race off to new highs either, but I think we're kind of settling into a new normal. And by new highs, I mean, like in the next couple of weeks. But the idea that this market can go to new highs, especially as global liquidity increases, is absolutely on the table. And then, like, as I've talked about before, I think later, as we see kind of a 2008, 2009 style correction, that's kind of teeing up for 27, 28, right around in there. Obviously, we'll know a lot more when that plays out. But in the short term, we want to see what kind of possibilities there are. Let's see. Gold here, of course, has been fantastic. I do think that gold is, I mean, today's news will be kind of interesting, but I do think gold here is ready for a pause. A lot of it'll depend on what the Fed comes out with today because it can react. Shortest 59.05. Neil, that might be an interesting target for the June caller. Yeah, let's look at bonds and TLT. So for the bond market here, I like how this pattern is playing out. And now we're kind of poised, not straight up, but we're kind of poised to rally into the first week in June. And the idea of adding to TLT here makes sense. So that is definitely not TLT. TLT. So TLT, we're kind of setting off here, but just we're essentially looking for a move, possibly to new highs here into June and July. And so I like this zone here. I also like that with this, you can go out, pretty far. You can go to July and get these pretty cheap and give yourself some elbow room, so you're not trying to catch, the exact leg higher at the exact time. You can kind of sit through some of this. And so the idea is if by buying those July at the money calls, and then if we can get kind of a pop, then we could sell some, 94s and 96s against it and kind of leg into those on strength. But yeah, I like that. Let's keep an eye on that one and see how it does today. Oil here, just, look, everyone's worried about inflation. There ain't no inflation if oil's at $59 a barrel. And I think that it's so critical to understand, a lot of times inflation means that money is being absorbed by higher price goods and it makes the currency, worth less and less and less. And when oil was at like $115, guess what? That is extremely inflationary because that's soaking up all the dollars. It's like, okay, are we gonna pay the gas bill, or we got to choose what bills we're going to pay in that kind of a situation, versus where we are now. It's kind of like, okay, this is just a normal expense. It's not this where it's sucking more and more cash out of individuals' hands and residents and businesses. And now we're kind of, we're at a point where, if anything, it's just it's a cheaper expense than it has been in a long time, since in 5 or 6 years. So super important to kind of understand that and the driver of inflation. And of course, as I've talked about before too, the dollar index, there's no inflation. And right now the government is just waiting for the numbers, which lag by like 60 days, to kind of show that. Doesn't mean that there's not price stickiness. There's price stickiness in terms of retailers. If they've jacked up their prices, they're going to be very loath to bring those back down, and that's just more of a function of the market. But in terms of real inflation, housing prices are coming down. I think housing prices are pretty sticky for a while, but those are coming down. You're seeing that in different parts, at least in Texas and things like that. So all those things are kind of coming together. So let's take a look here. And so Tesla is an interesting one here. After you got the huge Trump bump, and then we kind of came back from whence it's came. And for now, the question is, we're in this kind of trading range here, is can we actually bust out of this? This is not a bullish formation. This is a bear flag. And if you're looking at this from a technical perspective, it's like, wow, this thing could absolutely just die here. But it's also Tesla, and it can surprise and have those moves. So it's at a critical area here. If it can bust through these highs, you can see a move to, like, in between, 325 fairly quickly. So that's kind of the Tesla move, waiting to see if that's going to unfold or not. If we're looking at Netflix, this beast, 1137 here, and I mean, at some point we'll get a pullback to 1065 or so. That would be interesting to trade. But when we get a stock like this that goes parabolic, and it can get harder to get entries into, this is when we want to kind of drill down and say, like, okay, well, are there any squeezes on lower time frames? I just need to clear all these old levels out. Remember when the call wall was 775? Pepperidge Farm remembers. Okay, let's clear that. And so you can see the squeezes on the 30-minute, 60-minute, and 2-hour. So when there's a daily parabolic chart, I like to drill down, because it's hard. When you look at a daily chart, it's like, oh gosh, it's hard to get into this. It's going straight up. But then you drill down to a 30-minute chart, and now it becomes a little bit more normalized. So, oh my gosh, the stock's at 1100. Okay, well, there's a squeeze setting up, and blah, 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 blah. And so we do have a squeeze setting up here. And, we had this kind of a gap down, kind of a move. And so If this can trigger to the long side, then that opens up the door for a retest of the highs. So that one's interesting and one we want to keep an eye on. But that's a way to kind of look at some of the parabolic stocks that are out there. And let's see. Oh, I wanted to see, has DoorDash reported earnings yet? I think it's this week. They did. Okay. $39. Okay, interesting. Well, we'll see how that one plays out today. The dump dash. And I think did they just buy a they just bought a company out of the UK, or they're trying to. I know over the last 6 months, my family has kept them in business for sure. Yeah, it's insane. Yeah, so for TLT, looking at just essentially some July straight up calls. Like the premium's low enough that you don't even do a spread. I started off with the 90s. They're slightly out of the money. You could go 85, sprinkle between 85 and 90, and essentially just kind of looking for a move into early June. And then by going out to July, we're just reducing theta decay. So even though I'm not planning to hold it to the end of July, my ideal exit would be about the first week of June, and then we could roll it forward to do the same thing for a move into July. I don't know if there is a bidding war setting up with that between Amazon. What areas they're kind of getting into there. Yeah, and crowd has been one here that's been, what a crazy move. I mean, remember I call this the Delta Gate because Delta was the one that was complaining so hard about this, and it turned out that the Delta tech team just didn't install, they didn't install the updates, like the security updates. So, and I think once that all kind of settled in, it's like, oh well, these guys are still in business, they're not going anywhere, and people need them. So that was it's kind of an interesting crisis management type of a situation. And if we zoom out on this and look at this on like a weekly chart, it looks like a massive, massive, massive cup and handle pattern. If we kind of get a little handle happening there with a big, it's a BAWS, a BAWS, a big ass weekly squeeze. And so you get all this kind of combined, and that's where things like Fibonacci extensions come into play. It's like, well, okay, if this goes to new highs, where could it go? And then that 1272 extension, now you're up at $500. So that's an interesting play, especially in that it's just kind of shaken off this relative strength in the stock compared to the rest of the market has been kind of off the chain there. Having worked at Amazon, I'm not surprised Amazon drove Deliveroo into the ground. It was interesting. I saw. We'll pay attention to the CEO of Whole Foods, of course. Is based in Austin, and had mentioned like what a relief it was to go from being a public company to just being. He's literally just said like a line item on Amazon's P&L. So essentially, they kind of leave him alone, and just now instead of they're just a line item on this huge P&L. And he's like, it sounds like that they like that better, but of course then there's I'm sure there's changes and things like that that aren't that great. I did see an article that Duolingo, there was some worries about Duolingo not being able to survive AI because if I got that right, yeah, wasn't going to be able to survive AI because you could just ask ChatGPT like, "Hey, can you translate this for me?" and stuff like that. But what Duolingo did is they doubled down on AI, and now they have an AI kind of help create all their courses. And I think they just released like 180 new courses, and instead of it taking a year to put one together, now it takes 3 weeks to put one together, and then they can replicate that with AI across 50 other languages. So you know, it's an interesting case study in terms of instead of having your lunch eaten by AI, actually diving into AI and utilizing it and kind of partnering with it. So that's a fascinating kind of case study there. Yeah, so I do have still the Microsoft call debit spread here, and I like this pattern. This is kind of an odd, I think this is like an odd pattern, but if you get good earnings like this and you consolidate for 4 or 5 days, then you typically will break out of that range. And so that's kind of what we're looking at. We did the same trade last week in ServiceNow. And so we had like the 3 4 days of consolidation. We got in and and then exited. So that's what we're looking at. It's a pretty reliable pattern. And then of course we'll see how things play out today. But Microsoft needs to get through that 438 or 439 right up there. Oh, really? PF? I didn't know that. Yeah, it's funny. Well, it's interesting because of course, I don't know exactly what happened there, right? It's just from the few articles I read about it. But you get something like that, and it becomes very ego-driven. It's like, no, no, we're right, and they're like, dude, you didn't upgrade. You didn't upgrade your tech stack. We sent you the upgrade. We sent you instructions, and someone dropped the ball. But you can't say that. So yeah, it's interesting. It's like, would you rather be right or would you rather be happy, kind of a thing. What are some stocks that you guys are looking at now? We got about 6 minutes before the open kicks in here. Is there anything interesting? Spotify, yeah, look, great job, Spotify. I mean, they're crushing it here. I find myself using them more and more, veering off Apple Music and going to Spotify for playlists and podcasts and things like that too. And I don't know if it's the user engagement or what's driving them there, but certainly I've seen it seems like a lot of people, at least I know, prefer it over Apple Music. Yep, we just did the Tesla trade. We're trying to see if it can break out of its range. Good books for summer reads. I've been on a fiction tear lately. I go back and forth between fiction and nonfiction. So I've been reading The Expanse, and that's a 8 series science fiction series, and I'm on book 7. And I forgot who recommended it to me, but yeah, it's been fun. It's like I like the concept of it because a lot of times if you read sci-fi, it's thousands of years into the future and the galaxy's inhabited. And the guy who wrote this, he also worked on Game of Thrones, and he I think he worked on the novels with the guy who wrote Game of Thrones. His premise was, okay, yeah, that's great and all, but what about when humans first started going into space? They weren't traveling like that. They were just trying to inhabit, Mars. So anyway, it's good. It's a good read. Yeah, it is a series, and I remember I first watched the series a long time ago, and I just watched season 1, but that's and then I haven't. Yeah, I probably need to, once I'm done with this, probably dive into some more nonfiction books. If you haven't read The Surrender Experiment, that's one of my favorite. That was one of my favorite surprising reads. A lot of nonfiction is trash. I mean, it's just absolute garbage. And then once in a while, you find some that just kind of really stand out. But like the Four Agreements, The Surrender Experiment, Letting Go, those 3 books are always kind of top tier. Joe Dispenza, Breaking the Habit of Being Yourself. And as I'm saying these, it reminds me that it's, as a human, you kind of need to be reminded of some of this stuff too. And it's probably good to get through those again. Yeah, so we're gonna do the psychology class on Thursday. So if you're in this room, you have access to it. And Thursday at 5 o'clock, we'll record it. But if I've found this out going along the way too, but if your psychology isn't dialed in, trading is just it's really just it's an unfortunate way to work out, what your inner turmoils are, and you don't want to go through that. And so, I remember Mark Douglas said something one time. He's like, "Yeah, if somebody's psychology is off, having them stop trading is like money in the bank." And I always remember that quote. Yeah. Oh, thanks, Shepard. Yeah. Yeah. Another year around the sun, right? Yeah, Coin, the earnings on this are going to be interesting. So it's what's interesting here is that Coin is not, Coin is unlike MSTR. So MSTR is a proxy for Bitcoin, right? Which is why it kind of moves with Bitcoin. Coin is not. So Coin, as far as I know, Coin doesn't have this monstrous amount of Bitcoin on their personal balance sheet, right? Customers hold Bitcoin there, but Coin does not, that's not part of the balance sheet. But Coin is an exchange, and so one thing that's surprising about Coin is it's not moving along the ways of like CME and ICE and CBOE. Those stocks are all near or at new all-time highs. So either the trading volume has dropped quite a bit in Coin. So the earnings will be interesting just to see kind of what they say. Post Trump bump, crypto was exploding, and generally when prices are going higher, you get kind of this is a very retail centric crowd diving in and buying altcoins and shit coins and bitcoins, and that absolutely benefits. And then when things kind of slow down, and if the investors are buying and holding, not so much. A friend of mine, he works in the crypto space, and literally it's just like the quote unquote good old days of pit trading, but you can do look, if you want to do butterflies or all these different things on using Bitcoin options, you do it, and you got to like call the broker, or you just text them and say, okay, what's the price on $100,000 call? Okay, what would be the price on $100,000 call credit spread? And they'll make the market, and it's pretty fascinating. All right. Yeah, no, for sure, Bruce. I liked what you said the other day. We were in here, it was after we sat together in New York a couple weeks ago, and we were talking about the Open, and I was probably going fast and furious. I'll tend to kind of just um, lose myself in the moment as we're flowing through stuff. And you said, John, the Open is making you said something to the effect of, this is your the Open is making me nervous. I just thought that was interesting, because it is kind of like it, if you let emotions of like, gotta be careful. It's like, okay, excitement come in, and that causes you to do a trade. Well, that's not the right reason to do a trade, right? It's like, okay, I got it. Either I have a setup, i.e. a squeeze, or I've got a level, support and resistance, and all the things. And so all the fun stuff there. So let's just kind of look. I just want to kind of look initially, where we're open up. So S&P's cash is up, 8 points, and so kind of a flat open. Not a whole lot here. If we're looking at the indicators, the internals here, the ticks open up super strong. Unfortunately, if the ticks are opening up this strong, there's kind of nowhere to go but down. So I think this morning, the idea that maybe we'll test 5,600 on the SPX and see a couple of different things set up here. But also keep in mind, everybody's waiting for, I was going to say Alan Greenspan. That was a brain fart. Everyone's going to be waiting for Powell, right? So in the morning here, we're just going to be farting around. Um, I would avoid. I mean, avoid's a strong term. I wouldn't necessarily sell spreads here, because there's not going to be a lot of decay while waiting. Think of the FOMC announcement as an earnings event, right? The premiums will hold up there. So SPX here, kind of hanging on. I'm going to switch this one over to Netflix, because that's at least an interesting stock. See if there's any action here this morning and how much it mirrors, or it could mirror, what's going on in the markets here. And so I'd like to, so on something like, so when you look at a morning like this, it is kind of looking like, okay, well, is there a setup that's happening that would help us benefit from a short, kind of a short-term trade? And let me look at some things this morning that are moving. And, let's give the market 15 minutes or so. So Tesla, Tesla needs to really rip back up through 280 to kind of get anything going there. Let's see. Let's see. How did PLTR do after earnings? That one's got some interesting potential. I want to keep an eye on that. The one thing I like about PLTR as well is that it's pretty liquid and the options aren't crazy. I just want to see if there's a potential here for kind of a day trade. What are the options priced at? So the 110s, oh, geez. Okay, that's shocking. $2.70. I thought they'd be a lot cheaper. So the premium there is still a little whack. So we'll hold off on that. All right, let me just see if anything here is standing out. Kind of a lame duck here so far. All right. Netflix is at least moving. I mean, you could drive a truck through those spreads. ServiceNow moving. Just seeing if anything here is standing out as above and beyond. No. Disney. I guess Disney had some roller coasters come in positive. Like this is the first up day in Disney in a long time. We do this every 2 years. We do this. This will be our last one. It's in the next year is going to be our last time we do it, I think. But this group called YPO, which I'm a member of, if you're familiar with it, every 2 years they get about 150 families, about 700 to 800 people, and they do 4 days at Disney, and they block off parts of the park, all that kind of stuff, and it's pretty amazing how they coordinate it and the things that you get to witness and see and things like that. So I'm always interested just to see what you know Disney stock is, just because and I grew up in Southern California for part of my youth, and so I've always been a fan of Disney, but it's interesting to see some of the good things that they do or things that they do to kind of screw things up. I've heard though that once if you like Disney, that if you really want to go try a cool one, try the one in Tokyo. All right, let's see how some of these things are setting up here. Crowd's down 24. Yeah, it may not recover from that in the near term. Um, oh, wrong symbol. This has earnings, I think, today. So this could be an interesting earnings trade. I wonder what the expected move on this has to be atrociously high. So if you remember the last earnings, the stock went up, I think, 150 points and fell. My guess is that there is a huge move baked into this. Not really. 50 points. Okay. I thought it'd be higher than that. So 50-point move. I thought maybe this would be a good one. This might be a good one for an iron fly. And I'm going to be, so today I've got a meeting downtown from like noon to 4. And so if I want to do this trade, I would have to put it on, probably now, or around 11, and I would just post it. But last time it had such a huge move that I thought this would actually have a $100 move baked in, and it doesn't. But the implied volatility is pretty high. So, but anyway, that one might be interesting for just a premium suck. And if we did something like this $50 wide, so you have the $300 call and the $300 put. Now, if you're newer and you're like, okay, what are you doing? The idea of this with earnings is that, so the market makers have baked in a $50 move, plus or minus $50. So that means, if you bought an out of the money call, let's say you bought an out of the money put, the $250 put. Okay, it's $7. And so if you follow the expected move, $50, okay, well, this implied volatility goes from 300% to like 50%, then this is going to lose money, even though it falls $50. Now, if it falls $100, you can make money. And so the bet on something like this is just saying that the market makers have it right. If the market makers have priced this accurately, then that we would stay within a 50-point range, and then a trade like this would benefit from the premium decay. Not as exciting as buying a call and having it go up 10x. So what's interesting about this, and if we price this as a one lot here, 300, yeah. So I mean, basically, you're looking at risking $940 to make $4,000. So I like the risk to reward on that. And if for some reason it goes to $400, your max risk is $940 on this. So that's kind of interesting. I'm gonna let things settle in a little bit though, and so that's something I'll probably do, and if so, I'll post it. Um, just kind of a bet that we're not gonna have this crazy reaction like we did last time. And when in doubt, betting with the market makers, it tends to work a higher percentage of the time. All right, so that's more of an earnings. Let's get back over here because, oh yeah, it's okay. So this is why the calls are so high. This thing is cruising. So let's come over here. This one just has a little bit of action and it's liquid. I don't want to mess with today's options. So I'm going to go out to May. Like that's far. Okay. May. You got a little bit lower implied volatility. And, the deep in the monies, you only got about $2 a premium. And then, the at the monies, that's just a lot of premium. But of course, if it moves, it's not that bad. Let's actually go out a little bit further. I'm just curious. What are the 110s if you get 44 days? Like another $5. I'm gonna do this. So let's pick these up. See if I get it. I like and I don't like that I'm not getting filled. It just means there's a lot of demand for it right now. Okay, so there we go. All right, so let's map this out. And where is, now I gotta find you guys. I have too many open windows. All right, let's post this. And then let's come back here and just kind of look at what we're looking for on the stock. Theta decay. All right, you can get a little bit better price than I did here. So by going out to June, we're just kind of minimizing, the theta decay. And then if we come over here and we kind of drill down a little bit and just see what's going on, with PLTR. Oh, let's look at this one. So, we got this, move down right after earnings, and then we kind of farted around. And then this morning, you're seeing some action kind of coming into this with some volume. And so in the short term, you're looking to see, can we at least come back up to that 113 level? But then if we can break through that, it could fly, short covering, all the things like that. So I'm trying to think why are the voodoo lines off? There we go. Oh yeah, you got a big old snow line right there. So at the very least, just seeing, can we kind of work our way back up to that snow line with all the momentum and all the things happening here? And then I think the money shot here is that if we can chew through this, we get some short covering. And this to me would be kind of the target zone. Now, how do we, what if it goes horribly wrong? If we take out the lows here, then the trade's over. So that's kind of how I'm looking at this. And then even though that this could be, I would expect that this is a trade to be in for, a couple of days. Maybe it's a day trade, but I think it's a couple of days. But instead of doing options that expire today, expire on Friday, right? Because there's, different ways to do this. So you could say, well, I could buy options that expire on Friday, and that's like 2 days, or next week. Okay. And I just went out with June, and I just, one of the things, especially if you're doing long options and not spreads, is that you just want to give yourself, the gift of time. And all I mean by that is, let's say that, okay, it does have a little moment here and comes back here, doesn't stop you out, then tries to turn higher. This option that expires in 2 days is dead. Like, it just, kind of loses this, even if it takes out that high, then you kind of get back, you almost got to go like 50 cents above this high to kind of get back to even. Um, that'll be less here and it'll be zero decay there. And so that's kind of the idea. So then, so it's not like, all right, we want to get into this and just have exposure if it can do this. Um, and then just giving ourselves, kind of the gift of time that way, right? So that's what I'm looking at there. And if we come back here and we look at the indexes for this morning, Netflix actually looks interesting there too. S&Ps are up 21, Nasdaq's up 50. So the idea, and this is, we've seen this before, is, do we kind of get this light bid into Powell, and then does Powell say things that absolutely destroy the market, or does he say things that the market cheers and it just rips higher? And so that's kind of what uh, the playbook is for this morning. And then let me look and see how MSTR is doing. This is a trade that we have. Not MSTR, Monster. Monster Beverage. That's not too bad. I was targeting the 1272 extension. We haven't gotten there yet. it's not too bad. I'll give this a little bit more, give it more of a moment to see if we can get one more leg higher there. Yep, still in Microsoft, and this Microsoft call debit spread, and it's just kind of hanging out here. So what we're looking for is the move on this is to bust out above this essentially 440 level. So we're just hanging, and get a break through 440. So that's what we're looking at there. And it's shown some nice leadership the last couple days. Today, kind of meh so far. Yeah, no, Bruce just makes a good point too. Now, if you guys remember that FOMC meeting, and I don't remember what date it was, but you had, you could, like on the NDX, there were out of the money options. You could buy a two that went to 350. I mean, that was how fast it was down. So you'll have people buying it, and I wonder if it was here. I don't remember what it was, but I just know it was just a super nasty. Oh, that's a weekly chart. Super nasty kind of reversal. And so to the extent that something like that is priced in, then basically you can sell those as spreads, obviously, right before the meeting, and then it must have been it must have been this day. I mean that visually looks like what it was. And so you just had this chop, 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 and then you just had this insane move. And literally on the SPX, there were options that were $1 that went to 100. On the NDX, that were $1 that went to 400. So pretty fascinating that way. Yeah, even being wrong can be green. Yeah, Matt. If it breaks the low of the earnings bar, then then it's then we throw in the towel. And so this initial break above the skyline is solid. And in a perfect world, we can kind of consolidate here, kind of build up some energy like it did here, and then attack that snow line as kind of and that'd be a place too if you want to scale out. So we'll kind of keep an eye on that. And it's got some good kind of flows to it and everything like that. All right, let's see here. Yeah, so now I think just looking here at some potential index plays. Now, we expect the market to be, I think, kind of choppy, or I expect the market to be kind of choppy to up into Powell, and then what happens? Now, the challenge here on something like this is that normally you could benefit by, say selling an iron fly and just, collecting the premium, but the premium today will hold on. And if we come over here and if we look at this, you can see like, oh wow, 45% implied volatility. It's going to stay like that until Powell, and then it'll drop to like 28%. So you'll get this immediate drop afterwards. So in the meantime, if you're looking to play something here, um, if you think just when you do a spread, think of it as you're not going to really benefit from premium decay. You're only going to benefit from intrinsic moves. And if you're in a situation where you're really only going to benefit from intrinsic moves, meaning if you sell a put credit spread, if we trade sideways, you're not going to get any decay. But if we go up 10 points, you will get the corresponding uh, intrinsic decay, right? So it's not that great because you're not getting the premium decay. But that being said, is that what can make sense in a situation like this, since you're not getting a lot of data decay, is like, okay, well, if I think we can test 56.25, then do we buy the 56.25 calls? Then you look at this and like, dear Lord, they're $22. So you can see how much juice is packed in here. So this is one of those times where you can look at, say, something even further out of the money, just to say like, okay, because if we get a pop of 10 points to 56.30, these 56.50s will So what are the 56? So the 5620s, the 5620s are 25, the 5630s are 20. All right, so if that goes up, and then 5640s are 1630. Okay, so if we go up 10 points, the 5650s would go from about 1290 to 1660. So 3 points. So that's but but again, right here. So the easiest thing on a day like this too, easy being a relative word, would just be the futures. And that way you're not having to deal with this. But the main thing here is that you won't necessarily, if the market is trading sideways, you're not going to lose premium. And it's just kind of a unique time in the options where the premium, the theta decay, you're not going to get theta decay. You'll only get intrinsic decay, and it gives you an opportunity to essentially buy a call and not worry about the theta decay. If that all made sense. Um, and of course, there's you could do SPY and all that kind of fun stuff too. All right, let me see here. Internals catching the internals have been strong. So the main thing when you see something like this is that, okay, you got the ticks up here. That's great. Got to see this VIX come down. So if you got a situation where you have kind of positive ticks, but the VIX, is near its highs of the day, you're actually not going to move. But we get a combination of, ticks that are positive, and then the VIX, makes new lows on the day, then that gets interesting. So especially if we take out this, what is that, 24, little under 24.8. If we take that out, we could see a pretty good pop. Otherwise, we're just hanging out and not doing too much here. Oh, nice. Okay, thanks, PF. Pure play on the price of eggs. It's funny when you think of the word Calm, I would think that it's a meditation app, because I think there's a meditation app called Calm. Good to know. Yeah, you don't want to make an assumption there. Would a strangle work? Yeah. So Matt, yes and no. I mean, the challenge with the strangle is what's priced in already. And so and how you can figure that out is if you look at this and say, okay, the market makers are pricing in a $42 move. So let's say that we're like, all right, yeah, we think let's do a strangle, and let's do, let's do the 55, let's do 50 points wide. So 55 to the downside, the 55.75 put is $8.20. And then the upside, the 56.75 call is about the same, not quite as much, a little bit more skewed to the downside, which is normal. So you're going to pay $15 for this. So to make money on this, you've got to basically move 42 plus $15. That's kind of your break even. So that a $50 wide strangle is making a bet that it's going to move, $55. And if it moves more than $55, then you're making bank. If it moves $70, great, you make some money. But if it moves $30, you get obliterated. So it's just tricky because the market makers, they price this stuff in. That's always the tough thing there. It's like, they price it in, they price it in, they price it in. So in options like that, you kind of are looking for opportunities where it's like, oh, I don't think they're pricing this in. And that's where something like the squeeze comes in. The squeeze, if it's underneath the stock, it's generating this energy that can push the stock higher, and the market makers never account for that. All right, PLTR is trying to get going here. So the market makers never account for that, and I don't know if they just, I'm assuming they know about it, but they just can't, they can't get that into their risk model there. But if you look at, say, here's a squeeze to the downside, right? Okay, did the options, price in a 300 point move, 400 point move, 500 point move to the downside? No. And then a squeeze at least gives us a heads up that a larger than expected move is teeing up. And okay, S&P's new highs here, so we're cruising. And PLTR now we're in the money. Let's see if that thing can get going. Rust. Yeah, look, I mean, I think trades like this are super interesting. you have, first of all, the multiple squeezes. Now the monthly squeezes are amazing, but remember also they play out over the course of a year. So, if you're looking at this and going, I like Rost, and you can see like, okay, you can see these moves in the squeezes. It's like, gosh, this thing went from 60 to 100, and this thing went from 100 to 160. And an easy way, quote unquote easy way here to play that is to say, okay, well, I don't want to time this. I'm just going to go out a year, buy some calls, and call it a day. So let's go to June of 2026, and this way you ensure that you capture the entire monthly squeeze, and then it's just like, all right, well, how much does it cost to participate in that versus just buying the stock, right? So let's do the 150 calls. Yeah, well, first of all, okay, you can drive a truck through it. That's fine. I have absolutely been the only open interest on a position, and it's been fine. Illiquidity when you're right is your best friend. Illiquidity when you're wrong is your worst enemy. But that's where risk control comes in. So on something like this, you just have to be patient. I would, you place in kind of a low bid. You could also do it as, kind of a spread, kind of a thing. So, that's one way to do it. And then the other way to do it is just to say like, wow, that monthly squeeze could fire off at any time, but man, there's these other squeezes going on. Okay, let's go to June. 44 days out, and that's not too bad. And then all of a sudden it's like, okay, well, the 150 calls are $3.70. If they're that, I would say that that's kind of cheap. Then what does August look like? 100 days out. And then the 150 calls there are 620. Okay. And, hey, there's a little bit of open interest there. So I like something like this for a couple reasons. One is that if you're going 100 days out, you're not as worried about the timing, because a monthly squeeze, you don't exactly know. Oh, the VIX plummeting here. Nice. Uh, VIX, new lows on the day. That's what you want to see for kind of what, even though the ticks are coming down, it doesn't matter. VIX is making a new low here. The tick coming, the tick's coming down from plus 600 to plus 300. Who cares? It's not at a minus 1,000. If the VIX is coming down, that's going to drive. That's what's telling us the behavior that's happening. So the idea with this, and even though of course we all like shorter term hits, I'm going to buy this 9 days out. The nice thing about something like this, if you're going 100 days out, then you don't you take away the need to be precise, and there's kind of something to be said for that. Even if you end up only being in the trade for 15 days. Anyway, that's one way to do it. And so on something like this, if I know that there's a monthly squeeze and it could fire at any time, and I see the daily squeeze, instead of doing an option that's 9 days out and then kind of crossing your fingers that you get the breakout before your option expires, in this case, it's a little extreme. I'm also fine with 30, 40 days out. You go out 100 days, and now you really don't care. Like, let's just say it takes another 3 weeks before it can go. Great, that doesn't matter. And so anyway, that's probably a longer answer than you were looking for. But the main point here is that I like the setup. Then how do you do yourself the most service in setting up the trade? And in this case, even, and let's make it a more reasonable comparison. Let's say you're going to go 30 days out versus 100 days out. So even if you're in the trade for 30 days as this is playing out, that 30-day option, it's as you get closer to that expiration date, you really you got to have the price right. But if it's 100 days out, it's way more forgiving. So so that's why I'm a fan of like lower price stocks. I mean, it's, you can't do this with, like a Meta. You can, but you got to have a really large account to do that. It just gives you an edge. At the end of the day, a lot of times edge is defined as not allowing money to get siphoned from your account, and that's the way to do that. So yeah, I like the setup. Um, let's see. All right, so PLTR got new highs. So again, the test is going to be here. I don't imagine, if we get to this, I think it's going to be a fight. But if we get through it, then it gets interesting there. There's a lot of consolidation here at, yeah. I think this 115 or 116 is fair. So it gives us something to do whilst we're waiting. Federico, yeah, I'll do it real quick. The main thing is essentially you have two bets when you're doing option trades, and you're either, especially around earnings, you're either betting that the market makers are right or the market makers are wrong. So right now the market makers are pricing in a $50 move for APP. So if you think they're right, and they are right 70% of the time, then by selling the iron fly, you're essentially capturing that premium once the IV crush happens. So if you sell a $50 wide iron fly and it has a $30 move, you make a nice chunk of change on that trade. Now, if you sell the $50 wide fly and it makes a $100 move, you get your teeth kicked in. So that's where you just dial in the risk. The nice thing I really liked about it though is a $50 wide fly, you could sell it for $40. So that means your risk is, and again, I know if you're trading like a $5,000 account, this is unacceptable risk. But if you're trading a little bit larger account, like your max risk is $1,000 against a max gain of $4,000 per contract. Now, typically you're not going to get max loss or max gain. That just gives you your parameters. But on something like that, if my max risk is 1,000 and I could make 1,000, so I sell it at 40, buy it back at 30. That's a nice 1-to-1 risk reward ratio. All right. Let's see. What else is happening here, if anything? I should probably throw some volume on here. I need to take a week and just update all of my charts. I've been going back and forth to different locations and all the fun things. Oh, that's not what I wanted to do. Maria and I were talking the other night, and we have a place in Austin and then a place in Wimberley that and we go back and forth a lot. And we're kind of like, how much easier our life would be if we would just pick one place instead of this back and forth and back and forth. And we were debating because where we live in Austin, it's a great location. We're 20 minutes from the airport. It's a quiet neighborhood. There's plenty of trees. We've got like a 3 or 4 acre lot. And it's great, but there's also something very special about, in Wimberley, we've got a place, there's acreage, there's animals, it's magical. But a little bit less conveniences. And so we had a debate with the kids, okay, if we're going to sell which are we selling? And there's kind of it's not cut and dried. My daughter's like, we're keeping the Austin house. My boys are like, no, let's keep the ranch, we can always get a house. And anyway, it's just one of those things. Oh, do you, Matt? That's interesting. Yeah, so we're trying to figure that out. It's just like we're just at some point, you don't realize, and I'm sorry I'm going off on this tangent because this ties back into trading, is that decision fatigue is a real thing, and we found that there's plenty of days when Maria and I were hit with so many decisions about we have there's a house on the beach in South Padre and all different things and investments, and at some point you're like, imagine if we just had one condo and one bank account and like one blog and one trading account, how much easier life would be. So that's starting to get to be an attractive vision. So we'll see how it plays out. But it's like, you can either, you expand. I don't, it's you call it expanding or contracting, but the best thing I'd heard about it was, at a certain points in your life, you accumulate shit, pardon my French, and then at some point you start editing it. I'm like, yeah, let's start editing. Let's simplify things. Okay, there's the volume. Um, so yeah, some nice action there, and we'll just, this needs some little bit of back and forth here, but you got some good volume that came into this initially, and then as we're consolidating, the volume's dropping off. That's what you want to see, a little 5-minute squeeze here, and then this thing is kind of on its own journey, so we're not so dependent on what the S&Ps and the NDX do here, and we'll just kind of see if it can kind of continue along that. And then checking in on the S&Ps. Yeah, Jeannie, right? It's hard. Sometimes it's hard to let go of stuff. You're like, oh, this is what we want to keep this. Do we though? But anyway, that's a conversation we've been having over the last week, and it's been interesting because it's different points of view that come in, and it can be kind of distraught in terms of like, but wait a minute, we like both of these places, and it's like, but I found the same thing in trading, is that the more you really hone in and just focus on 1 or 2 strategies and 5 or 6 stocks, it's typically a lot easier get into a groove then I was talking to someone the other day. They're a prop trader. Um, at any given time, they'll have 27 to 30 positions on. I'm like, are you insane? And before the open, they'll put on like 300 or 400 limit orders. And I was like, dear God. But he's got a very systematic approach. So, and the computer helps him manage it and stuff like that too. That to me seems like it would be daunting, but it's you just kind of find what works for you and all that kind of stuff. Yeah, Matthew, you hit the nail on the head. I need to read. Yeah, I mean, Marie and I have been talking about this. I probably, it was literally a weeks before COVID lockdown. Marie and I went to India and we did this crash course. And it was again with YPO on the Bhagavata. So it was like a week long thing. You're sleeping in bunk beds, and it really had kind of a profound effect. And it's probably time to review that again because it's easy to forget that. And then, so the whole concept of that is that if you're unaware of it, humans have this kind of desire. It's for, whatever it is, another this, another that, and it's like throwing logs on a fire. That feeling of desire never goes away if you're not conscious of it, and then you just push it. And at some point, if you realize that's in place, you can like, oh, okay. And it's like, maybe we don't need the zebras. So anyway, it's fascinating because at different stages in your life, you're looking at, different things that are important and stuff like that too. And at some point, you kind of realize that all you got left is time. And it's like, do you want to spend your time, looking at spreadsheets or, walking, taking a hike, all the things. Yeah, or goodbye today again, right? So all the stuff. But yeah, trading's fun. Try not to get beat up by your kangaroo is fun. All right, so we got the nice grind. So as we're looking at this, the idea that we can get the nice grind in the FOMC, and it's we're setting up for that. It's hard to tell what'll happen. I can't imagine that Powell's going to screw this up. He's independent, but I'm sure he sees that I think a big thing that can help him is the fact that there was negative GDP growth last year, or not last year, last quarter. It came in at negative 0.03%. Um, that's one of the things that they look at. Of course, they do look at employment. Housing prices are coming down. Oil, as we've talked about, is there's no inflation there, and so if he's worried about inflation, he's looking at old data. And if he comes in and at least gives the quarter point shout out and shows that he'll be accommodative according to the data, that's really what the market needs to hear. If he's going to show a tougher stance, then it's going to be an interesting reaction. So that's what we can see there. Let's see if there's anything else here that's interesting to do, because the indexes are kind of cruising along here. Now, sometimes if you're doing kind of more of a day trade on options, what I'll like to do is see SPX, and I'm gonna look at the 5650s. So they're wouldn't say they're super cheap, but let's copy that. We're gonna throw it. Oh, there goes so Microsoft's trying here. Microsoft needs to get through 439. All right, so that's that call option, right, on the SPX. And we can see yesterday it was trading at 21. We sold off into the close. And and Chris Brecher has mentioned this, that the last 5 or 10 minutes when companies stop doing buybacks, you can see those declines. And that was certainly a good one yesterday. And and on something like this, you're kind of just looking at, all right, could I scalp this and buy it at like say 14 and sell it at 17? That's really it. We're not looking for like some crazy move here. Couple things to remember as well is remember that if we are going to get a reversal, it typically happens in this 920 to 940 central time zone. So, we've been rallying on the S&Ps into that zone, and is that an area where we kind of fade? So that's one thing I'm watching here too. These are the 2-hour quant pivots. So I just have those a different color than the daily. So that's just kind of a natural resistance area based on yeah, just based on kind of where it typically average travels during that time. The Nasdaq is weaker and it hasn't been able to make it. If you look at the ticks, they had some nice sustained action this morning and now just kind of belly flopping here a little bit. So we got a sell signal here on the S&Ps. This is something where, and this is something frankly where the moves are so small, it would make more sense to do it on the ES. Still a little early. So one trade I like to do, like kind of a morning trade, is that you kind of get a rally into this 920, 940 against a quant pivot, especially if there's like a voodoo line. I like to sell that, short it, and then to see what kind of, sometimes you get a slight pullback and then you rip higher. Sometimes it's like a major reversal. So still a little early for that. Sam getting out some crowd flies there. So Jonathan, I ran that right into January, and then I had some when I traveled, I would pause it, and then as I was traveling, the markets started going nuts, and so I've just kind of like set it, and frankly, it's like then you get so involved in what the markets are doing. It's like, and thank you for reminding me. I wanted to check in with them and just kind of say like, all right, how have you guys done or recalibrated or anything since then? I love the idea. I love the idea of it, and then it's always the question of, okay, well, how does what happens if the markets go absolutely crazy, or what are the best conditions for it and things like that too. Yeah, Tesla is just kind of got the sitting on its proverbial thumb here. Let's see. Yeah, looking like Tesla needs a breather. Microsoft, slight bid. Again, the play here is that it gets up through 439. Meta clawing back there a little bit. Oops. Amazon. Geez, nice move, Amazon. So Amazon is up to the daily H1 quant pivot. So that's typically a place to pause. And if it rips through it, it tells you something there. Hims had a good move yesterday, kind of quiet today. Hims Netflix. Oh, Netflix. Oh, nice. Yeah, great move. Did you, Jonathan? Okay. No, that's good to know. I will talk to them too and see what the update is if it could not handle that environment. So I'm interested in this 920 to 940 and see if there'll be kind of an opportunity to maybe capture a little bit of move on the downside. We're seeing that the tick, now the tick is rolling over, but the VIX isn't bouncing. So when you see something like this and the tick's coming down, but the VIX really isn't reacting, typically then any sell-off will be short-lived and it'll be a buying opportunity. Yeah, MSTR, let's see. So of course you always want to premise it by because it moves with Bitcoin. So Bitcoin's strong today. And then if we look at MSTR, it's had this kind of nice walk up here. And yeah, you got a good looking weekly squeeze. I mean, it's a pretty baller squeeze right there. It's one of those things where, yeah, it's extended, but the thing about the stock, A, it is a proxy, for Bitcoin, but B, it is designed as a volatility trade. Like it's kind of the trader's wet dream in terms of being able to trade volatility. And, one way to think about it is that, and I forgot, there's a site here that tracks it, is that, you have your net asset value, that's the NAV. So that's how many Bitcoin it holds. And then you can track like, okay, how much is it trading above or below its NAV? And that acts as like kind of almost like a Keltner channel. So if it gets too high above its NAV, it'll contract. And if it gets too low below its NAV, it'll rally. So that's in addition to moving with the price of Bitcoin. So that's always a kind of an interesting, just an interesting thing to kind of keep in mind there, is that percent to NAV does act as a band. And I think let me see if I can find it real quick. I know there's a site that tracks it. I thought I wrote down the URL, and by writing it down, I mean Google Docs. I'll show you a cool tool I found if you have a lot of windows open, like I typically do. If you hit Control, no, what was it? Control Alt. Yeah, anyway, there's a way you can search through all your tabs. But let me see if yeah, let me see if I, because if you guys will like this. It's it's that one. What are they? Okay, let me just grab it. I'll just reopen it. All right, so Gmail. It is time for me to organize my inbox. I'm pretty sure I saved it. Okay, let me just search for it then. Chart that shows NAV to MSTR value. Yeah, okay, here it is. I'm having to search through all the Google AdWords here. And Bitcoin priced. MrTrader.com. Well, I'll find it. But anyway, it's a real-time chart. Maybe if you just found it, thank you, Timothy. There we go. I think that was, yeah, there we go. Nice. Okay. So I don't know if that's the premium one, but there's one that'll show, essentially, it'll essentially just kind of show when it gets a little bit out of whack. And yeah, I guess if you do it real time, you can see it, what it is right now. So But anyway, it's an interesting thing. So when you can chart it in as bands, and if it gets, if the price of MSTR gets, too high in relation to its NEV, it'll contract. So that's a good time to sell call credit spreads and vice versa. All right, interesting stuff there. Okay, so let's come back. Let's come back now, and we're going to look at. We're kind of getting into this time zone where if we're going to see, oh, look at Netflix. PLGR, nice consolidation with low volume. That's what you want to see. Let's look at Netflix here. Boom shakalaka. Not even, so yeah, low volume consolidation and just off and running. Great move. It's a great move. So when we get into this kind of 920, 940 level, I mean, right now, and again, keeping in mind it's FOMC day, there is a tendency that we can just kind of grind into the announcement and looking to see if there's an opportunity. And the pullbacks are pretty shallow here. So even if it's, S&P, maybe 5 to 7 points versus, oh, we're going to roll over. There's no appearance that we're going to roll over and die, at least before the Fed meeting. Call wall is up at 1200. Yeah, let's see what Netflix looks like here. Yeah, it seemed like yesterday's sell-off in Netflix was kind of an aberration. Possibly, Bruce. Well, remember though, so if you sold a put credit spread, it's mainly benefiting from the move higher in SPX, right? So you get that intrinsic phase, if that makes sense. But maybe you're seeing, but maybe you are seeing some decay too. But if you sell a put credit spread and SPX rallies 10 points, it'll work because it rallied 10 points. Is versus let's say you sold the put credit spread when it was at 56.25 and an hour later it's still at 56.25. On a day like this, you won't see that as much decay as you normally would. And I'm not saying that that's something that's mathematically proven or anything. It's just something more that's just observed. So yeah, so if you are seeing it though, I mean that's useful to do too. Oh, the foreign movie thing. Okay, that crap. Right, that makes sense. All right, so it's about to take out the highs. Dear God. Okay, what's the high here? 1150. You go, Netflix. 1159.44. Oh, new highs. Great. Okay. Then that is done. Let's go over here. I'm curious is for next week, or even this week, I mean, at this rate, is a butterfly around 1200. So the $1,200 calls are 280. There's two schools of thought here. If you think it's going to go to 1200, you could just buy those calls, but you could also do this in a way just to kind of make it cheaper and give you a better probability of success. If we do a butterfly, because it's such short-lived here, and we just say like, all right, what if this is a $25 wide butterfly? because a $5 white butterfly is like kissing your cousin. So you're paying a little bit more than buying the $1,200 calls, but keep in mind if Friday at the close we're at 11.90, then that could be $10, $12, $13 versus trying to do something $5 wide. Bum. So that's interesting. So I'll kind of keep an eye on that and then see how it acts up here. But yeah, it looks like at this point we're just kind of teed up for the grind. All right, well, my time is wrapping up. A little bit of hurry up and wait this morning. I'll keep an eye for a possible $1,200 butterfly on Netflix. Maybe see if we can come off a smidge. And then I am doing the close tomorrow. Also, remember tomorrow at 5 o'clock Central, I'll be doing the psychology class for those interested in that. And I think that's about it. Yeah, I'm gonna look at the app I see. I gotta head downtown probably about 11, so I'm gonna give it about 90 minutes, and then I will take a look at that as well. Bruce, yeah, that would be awesome. I appreciate it. Yeah, I appreciate it too. It's fun. Dan, I think the class is tomorrow. The psychology class tomorrow at 5 o'clock. Yep. All right, guys and gals, have a great trading day. Remember, look for quiet, and then it's hard to tell. Powell can say things that are very disturbing to the market. Um, will he say something today that causes the markets to rip or die? It's everything's teed up here for more strength. If we're just looking at structures and things like that too. So that would make sense. And then we'll go from there. All right. You guys have a good one, and I will we'll see you here back on the mic tomorrow. And then of course anything here that pops up, I'll just post it in the presenter post. Have a good one.
Hey, what's up, guys? Sam here, kicking off the 9:30 for 5/7/25.